Hello and welcome to SwitzerTV Property. I'm Peter Switzer. And with the economy slowly opening up while forecasts of unemployment look higher than I really want to see, we find out what mortgage stress expert Martin North of Digital Finance Analytics tips will happen to property prices going forward. Then the co-CEO of Centuria, John McBain, looks at the outlook for commercial and industrial property, with the coronavirus clearly making life hard for all participants and players in the property market. Charles Tarbey, the founder of Century 21, talks about the rebound that he's seeing at the coalface for residential real estate, given the fact that now auctions and open houses are becoming easier to actually perform. But that's an interesting take, and he's actually quite positive on what's going on at the moment. And then finally we catch up with Deb Hutton, the host of Find Me a Beach House on Foxtel. I'd like to see what it's like to be the host of a property show with the coronavirus getting in the way of success and all those sorts of things. That's the show for tonight. Let's kick off and we'll talk to Martin North of Digital Finance Analytics. Whenever I need a dose of maybe objective pessimism, I like to talk to Martin North, who's the founder of Digital Finance Analytics. Martin, thanks for joining us.
Hello, Peter. Good to talk to you again.
Yeah, and I do think one day in our life when things are unquestionably optimistic, you'll actually be in the optimistic part of the argument. But at the moment, there are a lot of things out there for people to be pessimistic, without a doubt. And your latest analysis, does show that there is a fair bit of mortgage stress out there. Is that right?
Yeah, I try to keep a bit of balance, but at the moment there are a lot of negative indicators, unfortunately. And mortgage stress is a good place to start because, it's trying to get at cash flow, household cash flow, money in, money out. And a few months ago in February, March, we had 32% of households in some difficulty, just over 1 million. That's gone up to 38% in literally a month or two. And that means we've got another 300,000 effectively struggling. Now, I've taken account of the government schemes and the bank's support in terms of not principal and interest repayments, holidays, for a period of time. But we've got a lot of people now who are finding that the crunch is really starting to bite. Okay. And what was the best, therefore lowest, mortgage stress number you can remember in recent times? Well, it depends How far back you go, because I've been managing, the survey for nearly 20 years. But I can remember before the global financial crisis, we had mortgage stress in the sort of the 7, 8, 9, 10% area. Yeah. It then went up when interest rates rose, started to sort of stagnate when interest rates were cut, despite larger loans, but has now been climbing for the last 5 or 6 years. And that's been a combination of larger loans as house prices have grown, and also the fact that household incomes have been static in real terms for about the last decade.
So therefore, when you look at the number, I think you said the latest number you got was what, 38%? How does that compare to, say, the average of the last 4 or 5 years?
It's definitely significantly higher, and I was used to and not comfortable with, but concerned about when mortgage stress levels were in the 20 to 25%, so a quarter of households. And that's reflective of the fact that many times people commit to large mortgages on the expectation that they're going to grow into them over time. Okay. And we always know that some people will push the barrow as far as they can. But once it started to get up towards the late 20s and into the early 30s, I started to get really concerned, because it didn't seem to me that the official statistics and the RBA was really understanding how concentrated the risk is. On average, they say everything's fine. But of course, if you look in more detail, then what you discover is that there actually are significant pockets of difficulty.
Now, the interesting thing is that people listening to this think, okay, mortgage stress is something that people feel, but it might not have a real economic consequence. And I must admit, when I've ever argued against you or John Adams or Steve Keen, I would say, well, you guys are going to be good chance of being right if unemployment goes through the roof. And what we're seeing now is unemployment is going to go through the roof. And the longer it stays through the roof, the more likely your mortgage stress numbers have relevance.
Well, that's exactly right. And I've always said that, there are two things to watch. The first is the debt income ratios, and the second is unemployment. Unemployment is a critical and a killer, frankly, whenever things go bad. And to give you an example, over in Western Australia, over in, let's say, Mandurah, right, a postcode over there, which I know quite well, I was watching 3 or 4 years ago the rise in mortgage stress and the rise in unemployment. And over there, home prices have dropped 30%. We've got default rates of 4, 5, 6%, and we've got a lot of people in negative equity. Unfortunately, that is the sort of crunch that happens, and it doesn't happen immediately. And that's the thing about mortgage stress. If everything is good, if full employment is there, if rates are cut and are low, people can muddle through. But when income gets compressed, when jobs just disappear, it gets really tight. It takes about 18 months to 2 years to work through, but unfortunately, unless things turn around in the next 6 to 12 months, the writing is on the wall in terms of hard defaults ahead.
Yeah. I was going to actually ask you, drill down into a place like in WA, because they have actually been through a tough time. But the interesting, I guess, different factor is the government has recruited the banks to give loan deferrals for 6 months. So I guess the argument is, if this problem lasts longer than 6 months, then your worst case scenario has a lot of relevance. But if we rebound and we get a V-shaped recovery, which I think is harder to believe, but I'm hoping that it actually happens. But if that happens, then the translation from mortgage stress to real economic problems will be less of a worry. But the flip side is, if it goes on longer and the unemployment number stays up high for a long time, well, then these mortgage stress numbers are actually predicting some really tough times for the property sector.
Well, you are right, Peter. And, they've created a bit of a cliff, haven't they? If you think about it, the government schemes, probably will run to September, although they maybe roll them back sooner. We've got the mortgage repayment holidays up until September. So the critical question is, what's going to happen in September? Are they going to extend those support schemes further? Are banks going to be generous for a bit longer? If not, then you've got the first point of the crunch. The second point is, of course, the Statement of Monetary Policy from last week from the RBA spoke about unemployment being much higher at the end of next year than we had before we went into this. So we know that we're going to have an employment deficit. It's a question of how significant it is, how long it runs for, and frankly, how many businesses have disappeared forever, how many jobs have disappeared forever. And the other prospect, of course, is that there's going to be no real income growth anytime soon. So put all that together, and you can see in some of my scenarios how it could get quite nasty quite quickly. If we can get a recovery more quickly, and if the jobs come back and things, go the better way, then my other scenarios are not so bad.
Yeah, because from my point of view, the early predictions were that, okay, unemployment's terrible, in June quarter 10%, end of year 7%. That would be okay. That'd be manageable, I think, a rise from where we were around 5.4% to 7%. But if it's going to be hovering around 9 and 10% for a long time, well, then the worst case scenario looks on the cards. Now let's talk property prices as well, because you in the past have been a property price predictor, given what might happen. And have you been surprised how well prices have actually held up in the short term with the threat of the coronavirus?
Yeah, it's quite interesting. Again, I think you have to go granular, because if you look at the averages and some of the indices, they don't look too bad. But if you actually come down and look in detail at, for example, units on the western edge of Sydney, or if you look at some of the apartments in and around Melbourne, there you see quite significant falls. So we are seeing some adjustments, but it's early days. And remember that the transaction throughput is extremely low. So there's very little price discovery going on at the moment. So it's difficult to really get a read, I think, on what true prices are. There are indices who try to make predictions, but not sure how accurate they'll be. I think the truth will be told not in the next month, but in the next 6 to 12 months. And, there is definitely a scenario of price falls. Did you see CBA came out today and said, an 11% fall over the next period ahead, but they could see a scenario of significantly higher than that if things went pear-shaped. So, other people are also suggesting that prices could fall. Now, there are people, of course, saying, well, with all the stimulus and very low rates and all of the support mechanisms are in place, maybe they'll be strong enough to keep prices up, but I have a feeling that gravity's going to win this time.
Yeah, well, and I think where we started, namely unemployment, that's going to be the maker or breaker of who's right and who's wrong. So let's put you on the spot, because you've never lacked the guts to make a call. What do you think house prices let's concentrate in Sydney and Melbourne first, because they've tended to move, haven't they, very similarly. What do you suspect, if unemployment does hang around 9 or 10%, what do you think house prices will fall by?
Right, so I think that if you look at houses in the inner ring, so the very popular family properties, they're going to hold their value quite well, but probably will slip somewhere between 5 and 10%. But if you go out to the western suburbs, where you've got these thousands and thousands of carbon copy properties, they could well drop 20 to 30 or even more from where they currently are. But I'm really worrying about the high-rise apartment market, because there we've got thousands of properties already becoming vacant. The listings are going up, in fact, there, because people were using Airbnb, for example. Students have not come back. And a lot of those have got poor quality construction issues as well. And so there we could see the 40 drop, I think, not uniformly, but the worst case. So it does vary.
I guess the bottom line of that would be, if you're right, it'd be a very serious and long recession. It would create buying opportunities for those young people who've got jobs working for the government or whatever, but still, it's not really the scenario we look forward to. Now, all right, so that's one side of it. That's Sydney, Melbourne. Let's go around the country, mate. Like, Brisbane has actually started to look pretty good after a period of doing nothing for a long time. Do you think the same kind of hit would happen in Brisbane as well?
Well, I'm looking at the high-rise market in and around Brisbane, and there's a lot of supply there, not a huge amount of demand. Again, houses, I think, will hold their value better. But if you go slightly further, I'm worried about the Gold Coast in particular. I think there are early signs there of significant stress, and not only mortgage stress, but also pricing stress. And again, we've got a lot of high rise going on there, so I wouldn't be surprised. But I'm worried even more about places like Ipswich, for example, where there is massive mortgage stress, very high level of job impacts from COVID. And I'm afraid that I think their prices will drop significantly. So again, you have to go granular to really understand, these dynamics. Frankly, average prices are totally meaningless.
Yeah, and I noticed that you have a mortgage stress based on postcode, and I think, was it Toowoomba had one of the highest? Can you explain why?
Yeah, so that's a combination of no real jobs growth for a long, long time. The fact that the prices have not done a lot for a long time, but effectively income is the first point, and then unemployment's quite high there too. So in a way, if we argue that unemployment is a critical indicator of what's going to happen, unemployment's higher there. So unfortunately, that's how that sort of all dynamic works.
Yeah. Of course, this is an area that neither you nor myself are experts on, and that is the likelihood of either a vaccine being discovered or a second wave happening. But clearly, a second wave would increase the likelihood of your worst case scenarios being right. But the flip side, I guess, would be if a vaccine comes up quicker than expected, then the best case scenario would be on the cards, wouldn't it?
Well, that's right. I mean, I'm not a health expert, don't claim to be, but clearly you've got to associate the economic activity with the viral activity. If we can control it and tame it and get it to zero quickly and bounce back. But I'm also concerned, of course, not just on the local economy here, but also the global economy, because we are so reliant on, the trade and the travel and tourism, all of those things. So a lot of the Australian economy would still be cramped, even if we actually were able to control the virus locally. And that's sort of something I think to bear in mind. But yeah, if there is really good news on the health front, that will be helpful. But the Reserve Bank's three scenarios, none of them none of them had unemployment lower in in a year's time than before we went into this. All of them said it's a matter of just how much higher it's going to be.
Yeah. Fortunately, a lot of your great supporters have never had any confidence in the predictions of the Reserve Bank. So let's hope the Reserve Bank continues to be wrong. Martin North, a great pleasure catching up with you. And as I always say to Steve Keane, I hope you're wrong.
Peter, good to talk to you once again.
At a time when all businesses are challenged by the coronavirus, clearly the property sector have a few challenges as well. And to talk to us about what's going on in the sector generally and his own company, Centuria, I've got the joint CEO of that company, Centuria, John McBain. Thanks for coming to the program, mate.
Thanks, Peter.
All right, John, let's just talk about the sector generally before we start looking at the specifics of what you guys are doing. How has the coronavirus affected a sector that, when I've talked to you in the past, looked pretty well, particularly your company and companies like yours, looked fairly bulletproof as long as you had really good quality tenants. But the coronavirus has really thrown a few curveballs, hasn't it?
Yeah, we all used to, for the last 15 years, we've all been walking around saying that it would have to be some sort of black swan event. And certainly the swan arrived. You know, in terms of its impact on the industry, on the commercial and industrial real estate funds management industry, you know, it's varied across the sectors. So some sectors are doing better than others.
Yeah, and I guess, you know, in a perfect world, if all your clients were government clients, it would be a lot easier being a landlord expecting a government to pay the rents, but the more private and more exposed they are, the tougher it is when it comes to the negotiation process, I guess.
Yes, I think, we're really only involved in three major sectors: healthcare real estate, commercial office real estate, and industrial real estate. And probably of those three sectors, the industrial and healthcare sectors, they seem to be swimming along reasonably well so far.
Yep.
We would have more requests for rental relief from our office portfolio. But I think working through those, the government has encouraged us to work with our tenants, and that's what we've been trying to do. I think anyone who's a SME, a small business, both the state or the federal the state legislation has really instructed us that they've got to get relief, and part of that relief is a rent waiver, and part of that is some sort of repayment plan. And I think to a great extent, most of those smaller tenants respond very well to us. And we are pretty close to our tenants. We manage most of the properties ourselves, and we really have no problem with them. And it's pretty fair. If you've got a coffee lounge in the bottom of a office block and the guy can't open his lounge, I think it would be unreasonable. At the other end of the spectrum, we've got major, highly profitable companies attempting to achieve some rent relief, and we don't think that's in the spirit of the legislation. But they're very isolated cases. You have to look through this. This COVID-19 isn't going to be with us forever, but our tenant relationships have long leases, and our relationship with them is an enduring relationship. So we have to be kind to each other.
Yeah, and I guess the bottom line is we know that the implications for, let's imagine the people who've gone into your types of funds and your types of properties, they've been looking for returns that compare to term deposits or compare to dividends in listed companies. And we know dividends are going to be chopped, we know interest rates are going to be low, so therefore people who've enjoyed success with your products might just have to cop a little bit less than they've been used to because the coronavirus is a big curveball.
Yeah, no, we don't. In April, I think we collected 92% of the rent from our office portfolio, but we do expect, there's very isolated properties that have gymnasiums and a slightly higher content of retail. So we don't really have any freestanding retail investments, but we do have office blocks that might have a gymnasium and 2 or 3 shops in them. And I think the attitude from our investors has been, well, in fact, we've had quite a few emails from our investors making sure we're looking after those tenants. So it's been quite a rewarding experience. I think that people are going to be pretty sensible in relation to how they treat it.
Yeah. John, you've also recently got involved in a New Zealand business, Augusta Capital. Tell us about that.
Yeah, so Centuria Capital, the head company that runs all of the real estate business. We like to invest from time to time in other companies, and you and I have discussed New Zealand before. We believe it's pretty logical for us to expand our funds management business into New Zealand. It's closer than Perth. Not that we mind investing in Western Australia, but it's very easy to handle. It's got a very similar legal and property infrastructure system. And we've been watching one company in particular over there, Augusta. They're raising capital at the moment, and we've got about a 20% shareholding in them at the moment. I hope it could be a little bit higher over the next few days as their equity raising continues. A really similar business to Centuria. So just a way to really get a stake in a business which is doing exactly what we're doing, but in New Zealand real estate. So we really like the prospects. Once again, this is an investment that sees through COVID-19. I'm very happy with our performance to date. On the headstock, Centuria Capital or CNI, we didn't retract our FY20 distribution guidance. It's still firm. In fact, we reaffirmed it to the stock market yesterday. So we'll still be distributing 9.7 cents as we said at the start of the year. And I think it's because our business isn't so tightly wound or geared. And you remember those management fees based on the value of the properties. We haven't lost any properties. So our management streams still pretty intact.
Yeah, it's going to be a very interesting experience, John, because you have had a fantastic run, and you have talked about black swans, but you've also emphasised the calibre of your tenants. It's going to be interesting to see how that works out. And I guess the point you've made, and a lot of people might not have picked up on this, is that you don't have a big exposure to retail. Is that the area that's really going to be challenged in the REIT space over the next year or so?
Well, I think in terms of immediate effects, I think retail, and we know a lot of retail managers and they're professionals, and we've got respect for them, high respect for them, but it's just not an asset class that we've ever wanted to be exposed to. And I think certainly I think the whole AREIT sector has been damaged. And I think it's because the markets react very quickly to things, and the market's effectively saying, we believe, property values are going to plummet forever. That's just not a view we have. We know that equity values have deteriorated, and we understand that. And we think in the fullness of time, there will be some, amelioration to property value, commercial property values. It would be naive not to expect that to occur. But I think that's when, as you said before, the quality of your tenants, your relationship with them, and the location and positioning of your buildings and the way you've managed them, will be important.
Yeah, just before we go, mate, for people who are wondering, I always see your business in 2 parts. There may be 3 or 4 parts, but one is the headstock that basically, I guess, harvests the profits from the other parts of the business, and people can invest in that on the stock market. But you also have, over the years, effectively built, become essentially part owners of those businesses and get rent along the way. And when you eventually sell the building, they share in the capital gain. Is there a new building, or did you have a new building in your sights before the coronavirus? And if so, are you going ahead with it?
We didn't actually. Funnily enough, we just completed one unlisted as an unlisted single asset syndicate, and we didn't have a contract that spanned that distance. But I mean, I think looking forward to the future, you know, we had a client ring us yesterday who was rolling a term deposit for over $1 million, and his bank offered him 30 basis points as a return, or 35 basis points. So his natural question to us was, well, have you got a syndicate with a building that we could invest some money in? So we're making offers on buildings at the moment. I think our unlisted property division will be one of the first parts of the business that starts acquiring assets. Frankly, we're just not seeing cheap assets at the moment. Where this current financial dislocation differs from some of the others is interest rates are particularly low, and that's helping support capitalisation rates and keeping values firm. And if there is going to be any softening of values, we haven't seen it yet. We predict a bit might occur. That's we're revaluing things more frequently because it's important that we tell our investors what the value of their assets are. And I think a huge part of this is how long the virus is going to last for. There's a current trend to report that office accommodation won't be utilised and people are going to hand back their office. And I'm just doing an article with one of our people in the office. It's called Conquering the World from Your Garage. Frankly, we've got 120 staff and they can't wait to get back into the office. I think we're all sick of being in our bedrooms. And what most people don't realise, Peter, is when they come back to work, we won't be able to sit down all our people in our office because it's social distancing. Until there's a vaccine or a quick test, I would say a maximum of 30 to 35% of our staff will be able to be accommodated in our existing space, which flies right in the face of everyone handing their space back. So I think this is not going to play out the populist way. I think people want to be in their offices.
I must admit, over the years, John, I think the one quote that has explained some of the extraordinary developments in business I've seen is, mate, what if the opposite happens? And that could easily be the case.
Yeah.
John McBain from Centuria Capital, thanks for joining us.
Thank you, Peter.
Well, as we often do, we're catching up with Charles Tarbey, the founder of Century 21, and clearly the right kind of business to monitor what's going on with property and properties right across the country. Charles, thanks for joining us.
Thank you, Peter.
All right, well, we're starting to see some changes when it comes to open houses and auctions. What are you seeing right now, Charles?
Well, there's a really quick jump. It's almost again like, when things start really quickly and people get that fear of missing out. That seems to have started straight away because I think, as we all know, there have been a lot of people sitting on the fence, a lot of people waiting for prices to come down. And as I've said to so many people, look, let's be realistic. If you don't have to sell your home, you're not going to sell it. So you just take it off the market. And that's the majority of cases. There are a minority of cases where people might need to sell or they have to be somewhere else, have to transfer, but they're buying in a relative market. So if they're selling, they're buying in a market that's in the same shape. But realistically, lots of people have turned up, not at every open for inspection, but agents I've spoken to in depth have said a lot of people out there started looking again. We've already started selling property. So I think it's only a matter of time before it gets back on the same level that it was on, which was a level that was slowly moving up. Within at least, I'd say within a month's time, you'll see that change.
So, and I guess what we're going to see as the year progresses, provided we don't get a second wave shock and everyone's forced to go back to home again, let's assume that doesn't happen. What we're going to see is confidence growing both by potential buyers, but also sellers, and supply will go on the market. Is there any danger that there could be a a glut of supply that could drive prices?
No, I don't think so, Peter, because I think that those people that do put their homes on the market, I think it's going to be a steady flow. I note that when I looked at the stats again just a couple of days ago, we were down 31%, not Century 21, but the real estate industry in general was down 31% in terms of the amount of properties that we had for sale as of just a few days ago compared to this time last year. So I think people will slowly bring their homes back on the market. I don't think there'll be the rush because there are people, as you said, that still think, hey, maybe it's too early and I'll just wait it out for a few more weeks. So I don't think we're going to see it, but there will be a spike because if you've had that depression that we've had in terms of sales and listings and sales, you're going to have that spike also. And it'll just be a quick spike and it'll just level back out again.
Okay. What areas or states have been most impacted by the coronavirus, or has there been pretty...
Well, Victoria has copped it more than the rest of the country in terms of being able to get out and about. We've had WA doing open inspections for a couple of weekends now. Victoria is only going to be starting this weekend. We've already had New South Wales and Queensland well underway. So I would say that the state that's been most impacted by this has been Victoria. I look at New Zealand, at my stats in New Zealand, and they were in a complete shutdown. So wherever you were at the time the government called a shutdown is where you stayed. And so even after they went to level 3, you couldn't allow a property settlement for at least another 14 days after that. So if you look at a regional, New Zealand's been impacted more than anywhere else.
If you look at the auction clearance rates in recent weeks, does it tell you anything, Charles, or is it because it's just such an odd event in the history of an economy and the property sector? It's just too difficult to look at those numbers and make it...
Yeah, look, it's a very odd event. Normally we have higher interest rates, or we have other economic issues, or prices have blown out, or the things that we see all the time, those cycles we see all of the time. We've never seen anything like this other than when we go back into the 70s and there was a credit squeeze where you couldn't borrow money to buy a refrigerator. I think we've spoken about that before. That was pretty tough then. But this is a really odd event. So I do actually think the clearance rates have started to climb already. They were down in the 40s a couple of weeks ago, and this weekend just gone by, I know Sydney went through 70%, just through 70%. So I think it's already starting to demonstrate a return. But as you said, if we move too quickly on this return and we don't adhere to the requests or the demands that have been laid upon the real estate industry by the various state governments, we could be back in trouble again. The C21 guys are well aware of what they have to do. They've been very educated right throughout this COVID issue. So coming back into the arena, they've been educated once more again on how to make sure that they don't destroy the opportunity we have, because this is more of a concession at this point in time. And if we're not careful, that concession may be removed.
Charles, what are auctions like right now? Are they still online, or are they like the old-fashioned open air auctions?
Yeah, the old-fashioned way that we used to do back in the good old days, Peter. The auctions are coming back. Look, Victoria, as you know, has been the auction capital of the world. And they've been doing on-site auctions for years and years and years, more successfully than any other part of the country. So I would assume that they'll progressively come back to that. There have been a number of online auction companies that have sprouted very, very quickly and have taken advantage of the COVID-19. I do think that that may be a new way of doing business, but I don't think it'll go that way completely. I do think that getting out of isolation and getting in front of an auctioneer or an auctioneer getting in front of people in a room will probably dominate in weeks to come.
Okay. Have you seen any significant reduction in, or any changes in foreign interest in trying to buy in Australia?
Well, there is still a lot of interest from overseas. Because it's always been mostly an online business from overseas. And so not much has really changed there. If I talk, I can tell you some areas, for instance, the Sunshine Coast, I can tell you parts of South Australia have ridden through this COVID-19 issue better than they had the quarter before. So we've actually had certain areas where new homes, investment, etc., has actually picked up. So I would say that international buying is still there, exactly the same way as it was before.
Two things. I figured the Hong Kong riots would have increased the interest of people from Hong Kong in Australian property, and secondly, our success in, beating the coronavirus, at least in the short term, would have been another factor that might have attracted people. Do you think these are going to be important forces in 2020?
Yeah, I really do. I mean, you think about what's happened around the world, and you look at what's happened in Australia and New Zealand, what wonderful environments we have here. And we've always said that the majority of people consider these countries safe. They consider the government strong. They consider the property prices to be strong, the fresh environment we have with not just our resources, but our food supplies and also the actual geography of this country. There's so many reasons why you would want to live in Australia. And I think based on what's happened in Asia, particularly in China, that many of those people, if they could, would rather be living here than somewhere else.
All right, mate, we'll wind it up. I just heard a noise then which kind of indicates that an extraterrestrial spaceship has just arrived in your backyard.
Yeah, a bunch of cockatoos just flew over the house, Peter. It's a regular occurrence when you live in the Blue Mountains.
That's right. Those
Sorry
cockatoos, they are unbelievable. They're the ultimate larrikins who break all the rules, and they kill jacarandas as well. I've got one of those they often kill. All right, mate, thanks for joining us.
Peter, thank you very much.
That's Charles Tarbey, the founder of Century 21, which is now called C21. What a modern name he's got for Century 21. Well, when I think of property nowadays, it used to be, of course, that horrible person on Selling Houses Australia, Andrew Winter. But of course, the better person nowadays, he'll kill me for saying that, but I don't care. He would kill me anyway. But is Deborah Hutton, who had a fantastic show last year called Find Me a Beach House. And of course, she's locked away in her beach house at the moment because of the coronavirus. Deborah, thanks for joining us.
It's great to see you, Peter. Yes, Andrew Winter's going to come calling on you. I can tell that. Mind you, he can take it. He can definitely dish it out, and he can take it. So that's
he's
okay.
a terrific guy, and he's created a great product, and you did too. I was really happy that to tune into the show last year called Find Me a Beach House. Were you worried that it was going to be hard to find talent that actually were prepared to go through the whole process? Because you acted basically like a buyer's agent, didn't you?
Yeah, absolutely. It's exactly what my role was. Well, it's interesting because this format was, it's come out of America, and as you know, Americans are always the first one to put their hand up if they want to say something, if they want to be on telly, if they want to, they all just think it's fame and fortune, and they kind of want to get their head out there. Australians are not like that, particularly when it comes to people saying, well, I've got, X amount of dollars that I want to spend. We're very private. We certainly don't like disclosing how much money, we've got or what our budgets are. So there was definitely a challenge that was more specific to shooting the show in Australia than it would be in America. But what we did was we worked very closely with the real estate agents. So they did have buyers there, and we did have to talk about certain budgets. And look, within the show, we really tried to find things that were obviously kind of, wow, top end range, multi-millions. And then also we had to interject that with things that were obviously a little bit more reasonable. And we managed to find a couple of people down in Rosebud in Victoria that we found beach houses around the $500,000. So it was actually quite good to, to kind of just scatter it around. And there were some great characters in it. There were some that they couldn't say anything. So I kept kind of prompting them. I said, every time we walk into a house, don't just say, wow. You gotta.
Well, oh my God is another one, isn't it?
Exactly. Oh wow. Oh my God. And you go, no, there's gonna be, okay, stop. Let's just say something a little bit more description wise. So yeah, it certainly had its challenges.
Listening to you then, I always remember when I was working with the great Doug Mulray and Andrew Denton. And Doug said to me one day, I actually said to him, I said, how come you guys can consistently be so funny? And Doug said, well, we rehearse our ad-libs, which of course is something we learned.
True. That reminds me of a story that Harry Miller told me years ago, because he represented Graham Kennedy. And Graham Kennedy is one of the great artists that we had, who was just this bon vivant and funny. But he was exactly the same. He was a nervous wreck before he actually went out and performed, and he absolutely rehearsed every gag that you thought was just off the cuff.
Yeah.
So yeah, this is the little secrets that people have. We think it's so easy, but there's a lot of work that goes in.
Exactly. Now, all right, so I can imagine it's difficult finding people who want to buy a beach house and go on TV. So was this going to be continued, or were you looking at a different sort of theme before the coronavirus came along?
Yeah, well, look, interesting. The show did very well, and we definitely were looking at doing another series towards the end of this year. Whether that happens or not, I don't know. But we also started, because lifestyle has been very popular within Foxtel, and so they really started to look at injecting some new content, new fresh content into lifestyle, because no one else is doing it. So we sort of own that category. So came up with a fairly similar format called Find Me a Dream Home. And so it was a little bit different. It wasn't just about, property porn and looking at amazing homes. It was really answering the call to people's specific needs, whether it be Find Me a Dream Home, so it's got a granny flat out the back that I could put my mother, or it was sort of more specific about certain needs rather than just the glamour of the house, which I thought was quite a good take. Because it's just much more relevant and much more sort of reflective of where people are at and our different needs. So we and I had a lovely co-host who was quite handsome, and I was quite excited about working with him.
You're so biased towards handsome people, Deborah.
I can't help it. I just, it's just one of those things. I've got, I'm a very visual person. A
lot of people are like that, I'm going to say. You're not the only person in the world like that, but go on.
So he was a builder, and we started, we sort of got one in the can, and then everything was like, it became very, very clear that how are we going to be shooting this show in Victoria, in Queensland, in South Australia, because we'd found some really interesting properties, and it just became sadly very, very apparent that this show we just had to sort of pull up stumps and just kind of park it. And then, as you know, from there, I don't think there's any productions that are happening anywhere in the world that are not being shot, in their own environment, in their own house with social distancing and whatnot. Yeah. So a lot of things have been put on hold. I certainly hope towards the latter part of the year that we are able to sort of get back. But as you know, you work in television, there's people involved, there's camera, sound, and all sorts of things. And we are generally within a sort of a fairly close environment to work with each other. Less so for the show that we were doing because we're out and about, we're in houses, we're on, walking around properties. It's not like we're in a studio environment. So I don't really quite know where that's all going. What I have been doing, because I'm going a bit stir crazy. I mean, I'm not working. I've got a new dog, which is great, so she's keeping me occupied. But separately, I've been cooking a lot, and I love cooking. I've put out a couple of cookbooks in the past, and I just love. I'm not a chef by any means, and I'm not a fancy cook. I just like good, wholesome food. Cut a few corners, get it on the table, drag out the wine, have a nice time. So and my lunches tend to go for about 12 hours, Peter. People arrive at about 1 o'clock, and most of them leave about midnight. So it's sort of a show, tongue in cheek. Trying to work on a tongue-in-cheek sort of show around food, cocktails, wine, and stories. So I don't know. I just want to kind of feel like it's time to create something, give back, maybe create some fresh content.
Yeah, and obviously it has a lot of potential, something like that. But I was going to ask you the question, Deb, because you are, in a sense, you're a businesswoman. You're self-employed. You ply your trade to organisations like Foxtel. Has the coronavirus been something that you just couldn't risk manage for a person like you?
Look, it's interesting. To see the difference, to see how people are handling it. Some people are really going in hard and creating new businesses and using that time specifically to sort of, kind of draw on whatever they've got and create new things. I've sort of sat back on this for a while, and to be honest with you, I'm usually a bit frantic, and I've thoroughly enjoyed how everything's just settled. There's a collective energy that's very sort of dumbed down, and not dumbed down, that's probably not the right way to say it, but it's just this kind of, there's a softness and a stillness that surrounds us at the moment that I'm actually really liking. So for me, I've taken this as a bit of a time out, and I've been reading. I mean, I've never had any time to read. I'm not, I'm doing a little bit of television, but I'm reading. I'm just investigating things. I'm researching a lot of stuff. I'm just kind of just pulling and drawing back into what's me. So I'm not out there coming up with the next great entrepreneurial idea. And when this thing sort of starts lifting, come out of the box fighting, I'm actually really enjoying just really pulling back and just coming back to what's important in life.
Okay, I know you've been a buyer of properties in your lifetime, but your role in the show, Find Me a Beach House, what did you pick up about Australians' attitude towards property that you might not have understood until you started hanging out with people who are maybe even different to you?
Look, I don't know how I really sort of, I suppose spending time with different people that have different needs, and also working within certain budgets. The thing about any sort of property, unless you're sort of by yourself and buying it purely for yourself, there's always these compromises that we have to make. We can't sort of get everything that we want, and so it always comes down to prioritizing what's really important. And then with that, you obviously have to make compromises, and whether it's with the family, with any sort of future arrangements with people, it comes down to where. There's always this whole thing about where the location is that you're sort of after, and it's such a big jump because of course financially it's a big leap. Who knows where we're going in the future with property? That I don't quite know, but it really is going to. I think people are going to be looking. There's going to be a lot of change, I think, within the industry, and we sort of know that. And unfortunately, I think a lot of people, the property is definitely going to take a hit. You would know this as much as anybody else. Everything you read, you can kind of see how things potentially will unfold. And I don't know going forward, what it looks like for the next generation. But yeah, we're just going to be more focused and very, very specific about what we want. And we're not going to be going, buy this in a couple of years, turn it around. I think the way we're looking at property is going to absolutely change our perspective on investing, for sure.
Well, Deb, the one thing I hope comes back later in the year is Deborah Hutton doing a property show. We look forward to that. Thanks for joining us.
Peter, I hope so too. Let's keep our fingers crossed.
Thanks for joining us.
Thank you.